Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today we're looking at ChargePoint's latest report, and let's just say their second quarter results might have you charging up your expectations. Or maybe not. ChargePoint Holdings Inc. is a company that's been in the news a lot lately, mainly because they're a big player in the electric vehicle charging infrastructure. Think of them as the gas stations for electric cars, but way more high tech. So what's the big news from ChargePoint? Well, on September 3rd, they released their financial results for the second fiscal quarter, which ended on July 31st. This is primarily a report about how the company has been doing financially, how much money they made, how much they spent, and generally their overall financial health. Now, normally these reports like a 10Q or a 10K are packed with detailed financial tables. However, this particular filing is a bit of a different beast. It's an 8K, which is typically used to announce major events that shareholders should know about. In this case, ChargePoint is using it to announce their second quarter financial results. The main substance of this filing is a press release that was issued on September 3rd detailing their financial results. So while this 8K itself is quite short, it's essentially pointing us to that press release for the juicy financial details. We're going to break down what those results mean for ChargePoint and for the future of electric vehicle charging. ChargePoint became a publicly traded company through a SPAC merger, which is a bit of a shortcut to going public compared to a traditional IPO. This means that their journey as a public company has had its own unique set of challenges and opportunities. The company operates in a rapidly evolving market. The demand for electric vehicles is growing, and with that comes the need for more charging stations. ChargePoint's strategy is to build out this charging network to capture a significant share of this growing market. However, building out infrastructure is expensive and it often takes a long time to see a return on that investment. Looking at their stock, which trades under the symbol CHPT on the New York Stock Exchange, it's been volatile. This isn't uncommon for companies in growth industries that are still proving out their business models. Investors are trying to figure out how quickly ChargePoint can become profitable and how much of the EV charging market it can realistically capture. The core of understanding ChargePoint's performance lies in that press release they put out. While we don't have the full tables here in this 8K, the fact that they're reporting on their quarterly results is our cue to look at the numbers that matter. We need to consider their revenue growth, their expenses, and importantly, their profitability or lack thereof. Companies in this stage often prioritize growth and market share over immediate profits, but sustained losses can be a concern for investors. When we think about ChargePoint's business, we need to consider the competitive landscape. They aren't the only company building EV charging networks. There are other established players and new entrants, all vying for contracts with businesses, municipalities, and drivers. Their success depends on factors like the reliability of their chargers, the ease of use of their app, and their pricing strategy. The story ChargePoint is telling is one of rapid expansion in a critical emerging market. The EV revolution is here, and charging infrastructure is a vital piece of that puzzle. ChargePoint wants to be the go-to provider for this essential service. However, the path to profitability in such an infrastructure-heavy business is often long and requires substantial capital investment. So what does this second quarter report tell us? To give you the full picture, we'd ideally dive into their revenue, cost of revenue, operating expenses, and net income or loss. For example, if they showed a significant increase in revenue, that's great for growth. But if their expenses grew even faster, then that's a red flag for profitability concerns. Investors are always looking to see if revenue growth is outpacing expense growth. The key takeaway from this filing is that ChargePoint is sharing its second quarter financial updates. The real analysis would come from digging into the press release itself to see if they're hitting their growth targets, managing their costs effectively, and making progress towards profitability. Are they signing more deals for charging stations? Are their existing stations being used more often? Are their operational costs under control? Ultimately, ChargePoint is in a growth phase, and like many companies in growth phases, they might not be profitable yet. The critical question for investors is whether the company has a clear path to profitability, and if it can maintain its competitive edge as the EV market matures. We're always looking for signs that the company is moving in the right direction, even if profits are still down the road. Now, looking at these results more broadly, ChargePoint is in a sector with massive potential. The transition to electric vehicles is undeniable. However, building and maintaining charging infrastructure is a capital-intensive business. ChargePoint's strategy of rapid network expansion could position them well for future growth, but it also means significant upfront costs and potential cash burn. Key risks for ChargePoint include intense competition, the pace of EV adoption, government regulations and incentives, and their ability to manage operational costs effectively. The opportunity, of course, is enormous if they can successfully capture a large, profitable share of the expanding EV charging market. Alright, that's our brief dive into ChargePoint's latest report. What's your take on their progress and the future of EV charging? Let us know in the comments below. If you found this breakdown helpful, please give this video a like and subscribe to Corporate Decoder for more insights into the financial world. And don't forget to join our Discord community for more discussions, linked in the description. Thanks for watching, and we'll see you on the next Decode.